Okay, everybody. Hello, hello, hello. Welcome, welcome, welcome to this webinar's this workshop's fourth session, which is going to be about the uh, Forex basic lesson. Actually, it is, but it is a live trading summary of everything that we have covered so far. So I am going to introduce you to a lot of concepts, a lot of ideas, and we will be discussing all of them in a short while. So I just want to see if everything is working fine because I want to check. Okay guys, I think now there is no problem. If you think there is any problem, I think there is no problem. I think everything is working fine now, and let's get started with our material because today we got so many things to cover. So I hope everything is working fine, and I hope all of you are doing great. So let me take a look at the messages because I don't want anything to be left untouched. I just want to take a look at your messages. Ubaid ji is there. Hello. Okay, thank you, Ubaid ji. Samuel ji is there. Hello, waiting from Kenya. Okay, thank you so much, Samuel ji. You are from Kenya. So there is Manoj Patra ji. Hello, sir. Okay. Thank you for coming, Manoj Patra ji. Prabir Roy ji, namaskar. Sharad ji is there. Good evening. Okay, Bibas ji, good evening. And Apurba ji, Apurba Banerjee is, I think, you are here for the first time, Apurba ji. So welcome. Rajesh Sirvi ji is saying good evening, and there is no problem. Thank you very much. I learned something from you again today, sir. Thank you so much, Bibas ji. Okay, Viresh ji is there. Hello, Viresh ji. Thank you so much, everybody, for coming over here because today we have the summary of all the sessions that we have covered so far. Remember, we have covered 3 sessions, and this is the 4th one in our series of 4 total webinars. So this is the last one, but we will have our live trading session on the Wednesday. So I'm not going anywhere. We will always have the Wednesday live trading session. You must come there also because we will discuss many things. So without any further ado, let's get started and let's jump into our content. But I just want to declare this, just a disclaimer, usual disclaimer, sir, please share your code. Okay, that's good. Yeah, I am going to share my code, so you can remember, guys, whenever you use this code, your deposit will be doubled. Okay, so if you want to double your deposit, then you should use this code. So this is the promo code. Here you go. Okay guys, I am back. So let's go ahead and see what we have today. So today we have many things to cover. So I will go ahead and without wasting any time, we will discuss a lot of things. I will also take your questions, but please come with your questions on the Wednesday because Wednesday we discuss everything. Whatever you ask me on Wednesday, I will answer all of your questions. So if you want to ask me, please come to the lecture series on Wednesday. It's the live trading session. Good evening, Jigs ji is there. Jigs the Anonymous. Okay, so Vinayaka Pashte ji is saying hello, sir. Okay, sir, आप कैंडल से ट्रेड करेंगे या बार कैंडल से? Trading minds ji, I always use bar chart. I do not use candlesticks because candlesticks are not used by the professional traders. Sir, please share your code. I have already shared. Good evening, Rajuji. Okay, so guys, please be informed that if you want to deposit your balance for the first time, then you can use this code which I just shared, and you will get 100% of the deposit that you make. Okay, so your deposit will be actually doubled. And one more thing, that you can also get the certificates. If you have attended all 4 webinars, then we will give you a certificate for every lesson. Okay, one certificate for all four lessons, because this is a full course. It's a workshop. It's a full workshop. Okay, so, and we will also share with you the traders guidebook. So without wasting any time, let's go ahead. This is a short profile of mine. I'm Saeed Shaikh, and I'm a professional Forex trader. I have given more than 10,000 hours to the study of markets, and I have passed CFL level 2 and master degree in trading psychology. I am currently doing PhD in technical analysis of the Forex markets. So what is the content for today? This is the content. Okay, so you will have to understand the steps in trading. First, you got to understand the market structure. You got to understand the entry levels. We will discuss the. Okay, so FNO Trading G is saying, sir, where to learn bar candles? Okay, so I always use bar candles. If you just go back and listen to my lectures and webinars, I have always used the bar candles. I have never used the candles. I always use bars. Okay, so sir, please you can help me to put the stop loss in 5-minute chart, because always my stop loss is not accurate, I guess. Okay, so Jigsy, I will take that question, but first we have to cover everything. Okay, so we will discuss the key levels. We will discuss, of course, entry and exit points, and I will give you some risk management tips. Okay, so first of all, how do you understand the market structure? How do you understand the market structure? The most important way to understand the market structure, I think, is to understand that there are phases of the market. So there is accumulation, then there is distribution, there is markup and markdown in between these two. Okay, so you also need to decide in which trend the market is going. If the market is going in an uptrend, then you should forget about selling. Just to give you an example of the market today, so let's look at this. Now, where do you think the market is going? I think the market is going, well, you can see the market is going in the downward direction, right? But it's not important to understand only that the market is currently going in the downward direction, but you should also be able to understand that the market might react from this point, because this is a support level. It is an established support level. So market might come down to this level and then take up a jump over here. So if the market makes a spring over here, and you guys know about the spring, okay? If the market falls down over here and then goes up like this, then you should be ready to make a buy trade over here. Okay, so this is how you just understand the market structure. It's very, very, very important that you should be able to understand the market structure. Okay, so you can identify the market structure with what? With these things. First of all, you have the chart patterns. Chart patterns are the patterns on the chart, just as I showed you the spring. So spring, what is a spring? It is actually a chart pattern, isn't it? It is actually a chart pattern. Then you should be able to understand the trends and ranges. So what are the trends? The trends are higher high and higher low, or lower high and lower low. So it's a series of higher high and higher low, or a series of lower low and lower high. This is a very, very simple definition of a trend, but there is a lot more to it, of course. Okay, so have you previously taught bar and chart? Yes, I have previously taught bar chart. I have been discussing the bars always. Okay, I always discuss the bars. Okay, so there are also trends and ranges. So you should be able to understand if the market is currently in a range or it is in a trend. So I think currently the market is in a range. Where is the range? Well, you can see that the market is in this trading range. You can pretty much say that the market is in this range. Okay, now if the market is able to break out to the upside, then we will say that the market is in an uptrend. If the market falls down and goes further down, then we will say that the market has started going into a downtrend. So this is how we are able to understand the trends in the market. And one more thing, you should also be able to understand some elements, at least some elements of the fundamental analysis. And how do you understand some elements of fundamental analysis? Well, you should have some understanding of the news and some understanding of the other patterns, other factors in the market. Okay. And you can also, of course, use the trend indicators. Personally, I am not a fan of trend indicators, but they are helpful for many people. So you can use the trend indicators, or just like me, you can also start using the trend channel. So I do not use any trend indicators, but I do use trend channels. And how do I use trend channels? Well, let me show you. Now, from this point onwards, the market seems to be going up, right? So what I will do is, first I will make a trend channel right over here, just like this. Okay, and then I will clone this trend channel. I will clone this line and put it on the other side, so that you can see it is an uptrend. But here you can see it was overbought, and since it is overbought, it is coming down, and it is not coming down with a lot of force. So I am going to change the trend direction just like this. Okay, and now it is a downtrend, but it is not a very powerful downtrend. So I think it is a pullback. It is not a proper downtrend, but it is a pullback. So this is a pullback, and I will draw another line which we call as RUTL. RUTL is the reverse use of trend line. So just like this, I will make another trend line, and you can see now that this is oversold right over here. So this is your trade. This is your trade. This is the place where you can make a buy trade. And then what you do, then you will adjust the trend channel. This one, red trend channel, you should be able to adjust the trend channel. Now remove this line, and then you should be able to clone this one. How do you clone? Go to this one and put it on the other side. Where do you put it? Just put it over here. And when the market, now if you have made a buy trade over here, as soon as the market reaches this point, just get out of the trade. Okay, just get out of the trade, because it is being overbought over here. And then you can see the market is reacting to the downside. One more time, you have a trend channel. So how do you make a trend channel? You will start making a trend channel right over here, just like this. And it should be a different color, of course. And then you clone it, and then you put it on the other side, right over here. But the market did not come all the way up to this point, so this trend channel was useless. Okay, so this is how we keep on drawing the trend channels, and then we adjust this trend channel, and then we copy it and put it on the other side. This is how we clone the trend channels. So you put it on the other side, and there you have the overbought. And whenever you are making a buy trade, let's say you made a buy trade right over here. Okay, you made a buy trade right over here. If you make a buy trade over here, then you should exit here. Why? Because it is overbought. So this is how you play along with the trend channels, guys. I do not use the trend indicators, but I do use the trend channels. Okay, sir, is IB important? Yeah, IB is important, and you can become an IB, or you can also go to some other IBs and open an account. Okay, I mean the OctaFX has many IBs. Okay, you can also become one. So practice detecting the direction of the price movement in a trend detection. This is what we did just now. We did what did we do? We detected the trend. Can you see that the trend is going to change over here? How do we know that the trend will change over here? Well, if you think in terms of waves, then you can see that the first wave, the first up wave, let's say that the first up wave was this one. Okay, let me draw again. So let's say this was the first up wave, and then you have a down wave, and then you have an up wave again, and you have a down wave again, you have an up wave again. Okay, and then you have probably a down wave. Okay, so this is a down wave, and then you have an up wave like this. And then you can see that the shortening of the waves is happening. The waves are shortening. Now this time the market came down to this point, and it did not go much further. So what do you expect? You will expect that the trend might change over here, but it might take a lot of time. But you should not be buying over here, because the trend might change. So how do you know the trend will change? Because of the shortening of the thrust, which we call as SOT. Okay, so let's say just like this. So if I am trying to draw the first wave, the height of the first wave. So what is the height of the first wave? The height of the first wave is this one. So this is the first wave. Okay, so let me call it the first one. So this is 1. I am putting 1 on the left, and so okay, so this is 1. This is wave number 1. And where is the wave number 2? The wave number 2 started from here and it went all the way to this point. So you can say this is wave number 2. This is wave number 2 because this is started from here and it went up to this point. Wave number 2 started from here and it went up to this point. And then you have the third up wave. The third up wave is starting probably from here and then it is going up to this point. So you can say this is wave number 3. And then you can see that the fourth wave is not very big because it started from here and it went only so far, only up to this point. Okay, so how do you know that the trend is going to change? Because look at the waves. The first wave is this one, the second wave is this one, the third wave is this one, and the fourth wave is only this much. I'm going to remove this line so that it becomes clear. Okay, so the fourth wave, the third wave is very big, but the fourth wave is very small, right? That's why you should stop buying over here, and this is also not the right time to make any trades. And then what do you see? You, for the first time, you see that the down waves are bigger than the up waves. Look at the down wave, it is bigger than the up wave, and then the down wave, and then the up wave, but then it falls like crazy. So when you see this, this is a very clear change of trend. And when the change of trend occurs, you should be able to reverse your direction. And look at this. This is just the beginning of the New York session. When you see this, you are going to make a sell trade, and you have the selling opportunities right over here, this one as well as this one. The market is falling below this one, this point. So you have another selling opportunity right over here, another selling opportunity right over here. Okay, so it seems that the market is in a downtrend from this point. Best time frame for XAU USD, I think the best time frame for XAU USD is the daily time frame. Only trade on the daily time frame. You will have very small risk. Okay, you will have minimum risk if you trade on the daily time frame. The risk is not much on daily time frame. Yeah, Rajesh ji, it is double bottom. I tried to make a deposit, but it only shows 50% deposit and there is no option to put your code, sir. Okay, please try to contact the admin. Jigs the anonymous G, please try to contact the admin. I think there should be some place to put the code, and if you do not find any place, then I think there might be some error. Okay, there might be some error. Probably that's why there is no code. It is not showing any code because there might be some error. Okay, please contact the admin and they will help you to double your deposit. All right guys, so how do you understand the key levels? The key levels are the places from where the trends will start or the trends will reverse. So you can see over here that this was a key level. This was a very important key level. And why do I say that this was a very important key level? Because the market came all the way to this point and then it started reversing in the direction. Look at this, it is the reversal. And then the market slowly comes down to this point, and then if you make a buy trade over here, you have such a good trade, such a fantastic trade, right? Okay, welcome Jigs G, you are welcome. Okay, so this is where, that's why we will say that this is a key level. And which other key level do you see? Well, you can see this yellow line. This is also a very important key level. Why? Because the market came down to this level and it went up and then it reversed from here. So the points, the resistance, the points of support and resistance from where the market will change direction, those points are called what? Those points are called key levels. Okay, so please take a session on how to read bars. You mean bar by bar analysis. So bar by bar analysis, we will do a bar by bar analysis on in a live trading session. Remember, we have an LTS, a live trading session every Wednesday. Every Wednesday we have an LTS, live trading session. So we will have the bar by bar analysis. Okay, we will have and actually I think I also have done a bar by bar analysis session previously, so please go back and check. Okay, so let's go ahead, guys. So this is how we understand through the trend lines which I was using over here, and through also moving averages. And just if you didn't know about the moving averages, then let me explain how to put the moving averages first. Okay, so go to indicators, and just write down EMA over here. Okay, just write down EMA and you will have, okay, so EMA, and you have the trend channel. Okay, you have the EMA lines. All right, so EMA lines are there. Let me show you the promo code one more time, guys. Okay, guys, we are back. So I hope you got the promo code, and if you did not, if you just in case you missed the promo code, then I will share with you one more time, because some people want to make a deposit. So let me show you. And guys, please understand this thing. If you fail to double your deposit with the promo code, then you should please go and get the support from the support team. Ask this question and they will help you with this promo code, because this promo code is bound to give you the double of your deposits. Okay, please understand this point. All right, so let's go ahead and see what is happening. You guys have been sending some questions. I will take a look at that. Just now, a few minutes earlier, I have before the session I had bought a support of 1956. So you are, I think you are talking about Rajesh ji. You are talking about the support of this one. You are talking about this support, this one, right? 1956. Yes, I think you are talking about this support. So this is the support level, right? This one. So I'll make it black. So you're talking about this support, because it came down to this point and then it went up and then it fell down from here. Well, Rajesh ji, you can see that the trend was very strong. The downtrend was very strong. Very strong. So you should not make a buy trade when the market is in a downtrend. Okay, when the market is in a downtrend, it is not going to give you good buy trades, because the market is in a very clear downtrend. If the market is in a downtrend, please do not make a buy trade. Okay, don't make a buy trade. Rajesh ji is saying yes, gold. Yeah, I understood that. I understood, because 1956 is for the gold only. It is not for other assets. All right, guys. So let's go ahead, and I think I have already shared with you the promo code. So I am going ahead. You have Fibonacci retracements. On Fibonacci, I have already done a full session on in the form of a live trading session, but I will explain Fibonacci retracement right over here one more time. Okay, so this is the resistance, right? So you have a resistance over here, or you can say that this is the high point. Okay, just a high point. So this is a high point, and you have a low point which is right over here. Okay, so what I will do is I will start using the Fibonacci tool. The first one over here, this is called fib retracement. So I will start dragging the fib retracement from here, and I will go all the way to this point. So just start from here and go all the way to this point, and then extend the Fibonacci retracement levels. Just extend this thing, and what do you see? You will see that the market is coming up all the way to this point, which is 0.786. Okay, so this is also a very important point. This is a very important level. What are the important levels? There are a few important levels. The most important level is going to be this one, 50. The other important level is this 0.68 or 0.67. It is roughly 0.68. Okay, and this is the third one. Actually, sometimes you also have this one, but sometimes it works and sometimes it does not work. In very, very volatile markets, this point does not work. Okay, so this is how you will also use the Fibonacci retracement tool, right? What I will do is now I will put the support and resistance levels where they belong already. And now you can see that the trend is probably changing. I'm saying probably, I'm not saying that we are sure, because we are actually not sure that the trend is changing. So if the trend is going to change, that means we have to make a line over here and then wait and watch. Do not be in a hurry, guys. Do not be in a hurry, because the trend might not change over here. It might just zip through this point, and it might go all the way up. So when the market clearly drops like this, then you will expect that the trend has changed. And if the trend has changed, then you will put another support level over here, one support level over here, because it is an important level, and you will also make another support level right over here. So there are two levels. Okay, so there are two levels. So this is another support level, and this should be what? It should be black. Okay, so if the market falls to these levels, then we should be able to make a buy trade. But now you can see that we are not sure if the market will fall, so we will just watch the market and do nothing so far. Okay, so these are the tools which are very important. Support and resistance we discussed just now. So practice detecting key levels for trading intraday and intra week. So let's go ahead and detect the key levels. So first, let me remove this level because it is already there. So I will remove this. And if you want to detect the key levels for hourly, for weekly time frames, then you should go to hourly time frame. And for the weekly levels, it is hourly time frame, and for the other levels, it is the 30-minute time frame. So 30-minute is fine for the intraday, and for the intra week, it should be around 1 hour or 4 hours. 4 hour or 1 hour, that is totally fine. These two are okay. So do we have some key levels? Well, yes, I can clearly see that we have key levels. So this is Monday, right? This is Monday. Do we have Friday, Thursday, Wednesday, Tuesday, and Monday? So you have another Monday over here. So this level right here, this one is the weekly low. It is the lowest point of the week. So it is weekly low. How do we detect the weekly low? Well, I think I will put it in blue color. Okay, so this is weekly low. Do we have a weekly high? Well, yes, because this is Monday. So anything above these points on after Monday will be the weekly high. So where is the weekly high? This, I think, is the weekly high. So how do we put weekly high? Well, you can put it like this. Okay, Pushkar ji, Pushpakar ji is there. Pushpakar ji, hello. Welcome to this session, Pushpakar ji. So we have weekly level, which is this is the weekly important level because it is weekly high, and this is weekly low, right? Do we have daily high and daily low? Well, yes, of course we have daily high and daily low. Where is the daily high? Let's say for this day, because this is Wednesday. So which is the daily high? You can see very clearly that this is the daily high. This level right here is the daily high for this Wednesday. The daily low for this one is right over here. In the same way, where is the daily low for Thursday? Well, it is the same point. And where is the daily high for Thursday? This point is the daily high for Thursday. Okay, and in the same way, where is the daily low for Friday? The daily low for Friday was this point, and you can see that the market slowly came down to this point and it took a spring over here. This was an amazing buy trade. You make a buy trade over here, and this is where the trend is changing, so you should be able to get out of the market right over here. Okay, Samuel Kamau ji, hello from Kenya. Thank you so much from Kenya ji. Samuel ji. Samuel ji, I hope you will get some good ideas, some good points from us over here. And this, I think, is the point of today. So this is the today's low. How do we detect today's low? Well, it is the lowest point for today, right? So I think I will put a point over here. I will put a resistance. So this is the key level. This is support now, but it might turn into a resistance over here, and you can see that it acted like a resistance over here. So I think I will make it red, just to make it a little bit different from the other lines. So this is the key level. Okay, and what's happening over here? Well, maybe the absorption is happening, and if absorption goes successful, then the market will go shoot up to the upside from here. But you should be also careful, because we have another resistance level coming over here. So if you make a buy trade over here, your maximum TP can be just at this point. Okay, but I don't think you should make a buy trade over here, because it will be in a lot of hurry. So it is not going to be a good trade. It will be too hasty. Sir, how can marking in daily in the trading view? This is very simple. For the daily trading, for daily lines, you can just go to let's say you can go to 30-minute time frame. It is going to be very easy. Okay, and you have these lines over here. Maybe you are also asking for this, because this is session break, so I will also teach you to put the session breaks. But let's say we don't have any session breaks, then we will put it. But if we have, then we already know that this is the beginning of today, right? So this is the beginning of today. And where is the lowest point for today? Well, earlier this was the lowest point, but now this is the lowest point for today. How do we put the today's line? Well, this is the low of the day. Okay, this is the lowest point of the day, and in the same way, the highest point was at this point. Okay, very simple. But how do we put these breaks? This is called session break. It's not called daily line. It is called session break. So how do we put the session break? Just go to the settings on TradingView. Go to settings, and you have session break somewhere over here. Status line. Do we have session breaks? Scales. Canvas. Trading. Events. Yes, this is it, session break. So this is the session break. If I remove this, there is no session break. On events, you can go and put it over here, session breaks. So you have session breaks. Okay, so you can also put the events like this, event breaks. And what is an event break? Well, it is the point where you can see some days news. So this is the news for tomorrow. This is the news for tomorrow. Okay, so this is the news for tomorrow. You can put the session breaks, and you can also put the event break. So what is an event break? It is actually for the events, the news events, and news events we discussed in our previous workshop. Okay, so guys, let's go ahead. We have already practiced this. Let's go ahead and see candlestick information and the signal, indicator signals. So indicator signals we have already discussed about. Let's say this moving average, it is an indicator signal. How do we know that it is indicator signal? Well, a moving average will give you an indication when a signal actually when you see a trend in the movement of when you see a trend, a change in the movement of this indicator, this which is the EMA. So we are using EMA only, but how do we know that this is the change of the trend? Well, let me show you how you can know this. So let's see, guys, the market is going up from here, but then it touches these points. Remember, a moving average line is also very useful in detecting the trend. And how do we detect the trend? We can see if the moving average line is moving down, then the trend is down. If the moving average is going up, that means the trend is up, right? In the same way, if we know that the market is coming up to test this point, then this moving average will be very useful, because when the market tests this point, when the market touches this point, it might go down from here. Why? Because the moving average line is also useful for making the tests of the market. So if the market touches this point, it will probably turn back, and that's what happened right over here. And now you can see that the trend is upward, but if the market comes down to test this point, to test this moving average, then you will be able to make a buy trade one more time. Okay, so we have some comments. Thank you, sir. Welcome, Pardeep ji. Welcome, Pardeep ji, sir. How can marking daily line in trading? Okay, we have already done that. Hello, sir. Ahmed FX trader ji. Perfect supply and demand area. Yes, this is a perfect, that is a perfect demand and supply area. That's right. Actually, this is also a demand area. You can say it is demand area, or you can also say it is a demand zone. Very simple, a demand zone. And next time when the market comes to this point, you will be able to make a buy or sell trade. Okay. Yeah, we have used an EMA, and you can also use EMA to hunt your trade setups, but that is a topic for some other day. Okay, because we have a lot of stuff to cover today. So this was the indicator signal. An indicator signal is where the indicator will give you a signal to buy or sell. And how do you know that the indicator is giving you a signal? Just as the example I gave you, that whenever the market touches an EMA line, it will be a test, and you can make a buy or sell trade depending upon the trend of the market. In this case, the trend was downward, and so if the market goes up to test the level, then you should be able to make a sell trade. Okay. And how about the candlestick information? Well, I do not use candlestick, but I will give you an explanation of the bar by bar analysis. Okay, so what's happening over here, guys, that you can see, just look at this. So let's see that the market is going down. Right after this point, you can very firmly, very clearly see that the market was going down after this bar. It went further down, and you can see that the force of the bars is shortening. There is not a lot of force in the bars when the market is going down. It is going down slowly, and then it is going up, and then going down again very, very slowly. And then when you see this bar, the market seems to have a lot of strength in this bar, and it is actually also a local spring. You can very well say that this is a local spring. You can clearly see that this is a local spring, isn't it? So if the local spring is there, the market will go shoot up to the upside. Please tell us about EMA setup. Okay, I will tell you. Please describe about moving average length and time frame. Okay, so Shamsu Yuji you can just forget about the time frame of the moving average, because it is not relevant. Why do I say that it is not relevant? Now I know some people believe that it should be 26 moving average, it should be 13 moving average, it should be 200 moving average. Well, actually, if you ask me, I think it does not matter at all. It really does not matter if the moving average should be a 26 moving average or 4 moving average or 200 moving average. Well, it should not be very small. For example, it should not be less than 13, right? But it cannot be higher than 200. Any number between 13 and 200, that will be a fine number. That will be okay. So if you use, let's say, 15 moving average, I have no problem with that. Okay. So just ignore the numbers, because the numbers are not important. What is important is the flow of the moving average. You can very clearly see that over here the moving average is pointing to the downside. It is going down. So if it is going down, that means the trend is to the downside. It is a downtrend. Very simple. And here you can see that the moving average is not pointing down. It is pointing down, but it is flattening out. It is becoming straight. It is becoming straighter, and over here you can see that the moving average is completely flat. So what do you do over here? Well, if you see that the moving average is completely flat, then you should be able to make a buy trade over here. I'm using 200 EMA for support and resistance. Okay, that's fine. That's completely fine if you use 200 EMA, or if you use, I mean, it should be anything between 15, if it should be anything between 13 and 200. Okay, 13 and 200, that will be fine. Okay, so let's go ahead now. We have swing high and swing low point. So what is the meaning of a swing high? A swing high is the highest point and swing low is the lowest point in the market. Now it might not be the only lowest point, but if the trend is to the downside, then the market will keep on going down and down. So let me illustrate first theoretically. So theoretically it is just like this. The market is going up, then going down, then going up, then going down, then going up. So what do we have over here? We have the structure in which I have shown the swing high and the swing low. So if I write down this one and this one, this one and this one. So this point is swing high. Swing high. This is swing high. Guys, this is swing high. This is swing high and this is also swing high. How about this one? These 2 points, you can say they are swing low. Swing low points. Welcome Shams ji, welcome. Pardeep ji is asking, sir, I am always using 50 moving average with a 1 hour time frame. That's fine. For Pardeep ji, that's fine. If it is working for you, then that's okay. I personally do not believe in the numbers of any specific number of the moving average. So I'm fine with any number. Any number will be okay. It should not be lower than 13 and it should not be more than 200. Okay. So if you are using any number between 13 and 200, I'm completely fine with that. So this is swing low and this is another swing low, this is swing high and this one is another swing high. So what's happening on swing high and swing low? Well, they are very, very important points. Why? Because they will give you an entry opportunity just like this. Look at this. So if it was swing high, you were able to draw a line over here. Why? Because it was a resistance. It was something like a resistance, and then you can see the resistance is turned into support. So you can make a buy trade here. In the same way, swing high and swing low can also act like the support and resistance in terms of making sell trades. And the trend channels can also work as support and resistance of the trend channels. Okay, so you can make also the swing high, swing low trades, or you can also make the trades based on support and resistance. And sometimes what happens, guys, that is where you have the sweetest spots in the market. So what's happening over here is you have a resistance which is turned into support and the market is going up. So let's say the market went up like this and then it came down and then it went up like this and it is now slowly coming down to this point. So this is an amazing buy trade. Why? Because you can see that you have a resistance which is turned into a support over here, and you also have an uptrend channel. So this point right here is something which we call, this is what we call confluence. Confluence is the point where you have two things going together and both of them show the same thing. Both of them show the same thing. Why do they show the same thing? Because you can see the trend channel is up and you can see that this is the floor of the trend channel. It is an uptrend channel and you also have support over here. So a support level and an uptrend channel, they combine at the same point. You have a fantastic trading opportunity over here. Okay, so now the question is, how do you put the stop loss and take profit? That's a very, very important question, isn't it? How do you put the stop loss and take profit? If you buy here, and let's say you are buying like this, then you will put your stop loss just below the support level, and you will draw the other side of the trend channel, and that will tell you where to put the TP. So how do you put the TP? You will draw the other side of the trend channel just like this, and you can see that you can put your TP over here. Why? Because the market is going up, and it will go up probably up to this point. So this is how you put your TP. In the same way, if you have a sell trade, if the market is trending down, you will have a sell trade, right? How do you put the SL and TP in a sell trade? Well, I will show you just over here. Let's say the trend is to the downside, okay? And the market is coming down. It is coming down like this, and you have a resistance over here. Now earlier this was support, and now it is resistance, and it is coming down like this, and then it is going up slowly, and slowly it is going up. You have a confluence trade right over here. The market moves like this. What do? You will make a sell trade right over here. Why? Because there is a confluence again. There is a confluence, guys. Look at this. It is a confluence, a fantastic opportunity, a confluence. So if you sell over here, where do you put your stop loss? Well, if you sell here, then you will put your stop loss just above the resistance level. And where do you put your TP? Well, there can be 2 points on which you can put your TP. First, either you put it on this support level, or you can draw the trend channel, proper trend channel, and you will see that the market is coming down to this point. So you should make a TP, you should put your TP right over here. So this is how you put your SL and TP, guys. This is how you put your SL and TP. This is something we have already done, so let's go ahead. So, what is risk management? A very important question. What is a risk management technique, and how you should be able to manage your risk? How do you manage your risk? Guys, it's very, very important that you should be able to make a sound strategy for risk management. Risk management strategy. So I will give you a risk management strategy which will work for you, hopefully. Do not risk more than 2% of your account on any single trade. Okay, don't risk more than 2% of your account on any single trade. Number 2, put optimal TP. Don't run away from the winning trades. Don't cut your profits too short. Okay, now this is a very important idea, and I hope you guys already have heard this point from many other teachers. And guys, one more thing, please. Can I request you all to please go and like the video, because it will be extremely helpful. And if you want to help me, please go like the video and then continue watching the video. Okay, thank you so much in advance. So what about a sound risk management strategy? Number 1, do not risk more than 2% of your account on any single trade, because it will blow your account. Okay, if you risk more than that, the account will be blown very soon. So do not risk more than 2% of your account on any single trade. Okay, number 1. Number 2, always put optimal TP, and always 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 put your SL. It is a must. It is a must that you should put your SL always. Manish G is saying done sir. Thank you so much Manish G for liking the video. Guys, everybody please go and like the video. Pardeep Ji is saying already done. Thank you so much Pardeep Ji. Thank you so much. So guys, how do you manage your risk? These are the important tips which I can give you. Okay, I have some more tips which I will discuss, but these are the important ones. So a proper risk management strategy will always reduce your losses. It will help you to reduce your losses, and it will keep you in the market for a longer time. Because many people just lose their account, wash out their account in a single trade, or maybe 2 or 3 trades in a single day. Can you imagine this? Some people deposit a $100 account, start a $100 account, they make a deposit, and then they make big trades and they lose their account and everything within one single day. If you also are among those people, then please be informed that you can improve your trading only by managing your risk. Because your risk management, your capital is just like oxygen in the market. If your oxygen is over, you are not able to breathe, then you will die. And what is the meaning of death in the financial market, in Forex market? Death means you are out of the market because you have blown your account. So please stay in the game for a long time, because the market will give you many amazing opportunities every single day. Guys, can you believe it? Every single day market gives you amazing opportunities. Shams Ji is saying, if you don't mind, please give advice about position sizing also. It's pleasure. Thank you. Yeah, I will give you the position size. So how do you make a position size? I will give you about $100. Okay, on a $100 account, put 0.1 lots on GBP USD and 0.4 lots on gold. But if you follow this, then I think it will be something like $4 or $5, which is more than 2% of your account. So let me make it $200 account. So if you have a $200 account, then you should be doing like this. Now, of course, you understand very well that if your account size is $400, so let me change all the things. Okay, let me change all the things over here. So if your account size is, let's say, $500, then what do? Just multiply everything with 0.25. Okay, so this will be 0.25. Multiply it with 2.5. So this will be 0.1 lots. Okay, it's not 0.4, it is actually 0.04. I'm sorry about that, my mistake. In the same way, if your account size is $1,000, if your account size is $1,000, then you should do how much? You should put 0.5 lots of GBP USD, and in the same way you should be putting how much? 0.4 lots of gold. Actually not 0.5 and 0.4, let me do it. Yeah, it will be so on $200 it should be this, and if it is okay, so it will be 5 times. Yeah, that's fine. And 5 times this will be 0.2, so 0.2. Okay, so now guys, you can understand this. In the same way, okay, so let me give you one more idea. If your account size is, let's say, $100, then you just put half of everything, 0.05 of GBP USD, and of course 0.02 of gold lots. Okay guys, so let me discuss the tips now. We have many tips, as I said. So number one, get adequate knowledge on the Forex market and its risk before trading. Learn to calculate the lot size. How to calculate the lot size? Understand this thing from the markets. Number two, backtest new strategies in your demo account before trading on the real account. So do not start your real account very soon. Start with the demo account first. Number three, understand the impact of leverage. So a leverage means it will increase your buying power. And please do not put very big leverage. Just put 50 leverage, 30 to 50 leverage, that will be fine. Use a moderate position size. So it should not be very small, but it should not be too big. Thank you, sir, with all due respect. Thank you so much, Shamsji, for your respect. Use a moderate position size, as I said. Set preferred stop loss and take profit levels on your trade. Always know how much you are risking. Always know where will be your stop loss, okay? You should know in advance that this will be my stop loss level. And you can also use the trailing stop loss. Choose a moderate risk reward ratio. So a risk reward ratio is the number of times how much you will gain. So for example, if you are risking $1 and your profit target is $2, then your risk reward ratio is double. It's 2. Okay, so risk reward ratio will be 2. And know when to stop after consecutive wins. If you have so many winner trades, just stop it. Control your emotions, don't overtrade or revenge trade. Sometimes what happens, you lose a trade and you get angry and then you want to take revenge from the market and then you lose more. And the last point, never risk more than you can afford. Maybe 2% of your lot size, 2% of your account on a single trade. So we discussed these ideas and we have also discussed it in practice. So this is the promo code now. This is the promo code, guys. I promised that I will share with you the promo code one more time, which I am doing right now. You can make a deposit if you want and it will be double of your deposit. It will give you 100% more. Now, if you have any questions, you can ask me, but always remember that you can get lots of free educational content in the official Telegram channel of OctaFX. So I will also request the admin to share with you the link for Telegram page. If you follow the Telegram channel, you can get lots of great ideas in the Telegram channel. I personally keep sharing a lot of ideas in the Telegram channel. Karanji is saying, thanks for all information, Saeedji. Thank you so much, Karanji. And I hope you get a lot of good ideas from us, from me, and you can also watch my other webinars which we have discussed previously. Welcome, Rajesh Rawalji, welcome. And guys, if you have any questions, you can ask me right now, or you can also ask me on Wednesday. On Wednesday, this Wednesday, only 2 days from now, same time, 8 p.m. Indian time, we are going to have a live trading session, an LTS webinar, and we will discuss many things in that LTS webinar as well. Okay guys, so I wish you all the best and I hope you are making good profits from the market. If you are not making any profits, then there might be some mistakes you are making. Please don't make those mistakes, and today's webinar will be of great help if you watch it again and again, because it will help you avoid the mistakes through proper risk management. Welcome Sharadji. And guys, please, one more time, I am requesting you to please give me a thumbs up, okay? Like this video, because it will be very helpful. Okay, so we also have shared the Telegram link. You can go and join the Telegram channel. Khan Forex G is saying, my question is, sir, I want to master in trading. Give me one good idea. I am also done economics. Okay, that's great. You have a background. Welcome Shams Ji, welcome. Welcome Apurba Banerjee. Okay, so Khan Forex Ji, one good idea which if you want to understand, it is that risk management is the king. You need to be able to understand and follow the proper risk management. Akil Ahmed ji, SMC is pretty good. I personally don't use SMC. I personally use Wyckoff method because I think Wyckoff is the best method, but you can also use SMC. No problem with the SMC. Vinayak ji is saying thank you. Okay, welcome Vinayak ji. Okay guys, I think you are getting some good ideas. Please go and join the Telegram channel. As I told you, we keep posting lots and lots of educational material which is completely free. Apurba Banerjee is saying already done. Okay, that's great. That's great. Thank you so much everybody for coming over here. And I wish you all the best. Take care and good night. I will share the promo code one more time just in case. Okay.